Well, let's keep the retail conversation going. We've got Oliver Chen, Cowen Senior Research Analyst. Oliver, it's an interesting mix to see this shift that has been happening with Walmart. On the one hand, they've still got their core customers that have been coming through the door, trading down, but they've also gained a bigger share in terms of groceries from those who are higher income. When you look at the quarter overall, what stood out to you the most?
Yeah, Kiko, we were happy with the way the top line evolved. That 8% comp was nicely balanced between traffic as well as ticket. And you're right, all consumers are looking for value. So having higher income consumers come to Walmart's a strong positive. And they also saw increased engagement with existing customers. What's really been happening at Walmart is a modernization of the whole omni-shopping experience. I use curbside pickup when I'm at home in Louisiana, and thinking about buy online, pick up in store, ship from store. All these are features that everybody likes because everybody likes convenience. Second, value. Value is such a big focus for all of consumer right now, high income, lower income as well. And there's a lot of pressure on inflation, which is really hurting lower income consumers. Walmart is extremely committed to everyday low prices and has made great efforts and strides there. Grocery has been a very successful business and is a very scale business at Walmart too. It's about 55% of revenue.
Brad just talked about some of the steep discounts we've been seeing. You know, part of that sort of started several months ago when we heard the warning from retailers about increasing inventory, having to slash prices so they could really clear the shelves, so to speak, in time for the holidays. What does that picture look like for you? And what do you think customers should anticipate going into the holiday season?
Akiko, categories like clothing, apparel, some home and electronics, those are categories that have been over inventoried and there's markdowns there as well. We're also cautious on the shopping mall. With higher gas prices, there's been less traffic to the mall. That's been something to watch. But as we survey our customers are actually shopping a little bit later because if you think about last year, we had very vocal and obvious supply chain problems where people were stocking up and understood that dynamic. So shoppers shopping a little bit later, but there's a very promotional environment. It's somewhat selective in different categories. We'll see less promotions on beauty and other categories that are working better. And there's a whole go out and travel moment that's happening in terms of consumers spending on travel. That's taking some away from the wallets as well. And spending on work clothes again, like suiting and other features and dresses as people do go out again as well.
You've got a price target on the stock of $165 a share, so a little more upside to where we're seeing it trade right now. What do you think is going to be the big catalyst, especially in the face of some of these macro headwinds?
Yeah, we think Walmart's very well positioned as a defensive idea and as an offensive idea. Keep in mind, Walmart has a marketplace model, an advertising revenue model digitally, and is rethinking the whole global ecosystem of convenience and micro-fulfillment centers. Also, Walmart's very defensive in that it offers consumers a strong value. So we're excited about prospects ahead for Walmart, and we think they guided appropriately with plenty of caution in terms of what the consumer is experiencing. The consumer is very price conscious. As we think more thematically across the sector, we like luxury goods and we like value. We like retailers like Walmart and Costco, but handbags and Louis Vuitton, Tapestry, Capri, Michael Kors, they are experiencing successful pricing gains and people still want luxury goods as well. So that's what we're thinking as we zoom out and do a overall strategy.
And finally, Oliver, you know, I'm thinking about some of the bulk buys that are happening as families really try to seek out better pricing, better discounts. As you point out, Sam's Club, you know, comps improved, but they've got competition from the likes of Costco and membership clubs there. How do you think they are positioned as families become more and more cost conscious?
Yeah, that's going to be an interesting semi-permanent perpetual trend as we live in this new structural world of inflation. Costco's SKU and assortment is very slim and they run on very thin margins. Costco is very unique in that most of their profitability is on the membership fee rather than merchandise margins. So we're excited about that business model. And then Walmart's perspective is working with suppliers, negotiating the best prices and offering everyday low prices to America. So we think they're both well positioned for different reasons, but really these retailers are looking on an item by item basis to make sure their pricing makes sense. Walmart lowered prices on hot dogs, will keep prices constant on the Thanksgiving dinner. Those are all really important things, and consumers are trading down. So we're seeing consumers go into private label as well as trading down into less expensive proteins. That's definitely happening.
Hot dogs over premium meat, right? That's what we're seeing right now
I
in
love hot
terms
dogs
of.
too.
Yeah. Oliver Chen, as always, good to get your insight. Oliver Chen, Cowen Senior Research Analyst.